Alright traders, this is another weekly Forex forecast on Chart Empire Trading Academy. So this week I am going to walk you guys through the market. I have the Forex crypto market, and this weekly Forex forecast is for the 6th to 10th of April year 2026. So the first asset on our list is let's go through the GU, that is the Great Britain pound sterling. So I am going to wipe out this chart so that we can start afresh to mark our key level structures. Now the first thing we need to do on this price chart is to mark out our key level structures. So we have some levels at the price of the 1.30115. That is our technical key level support, and we have another level above, which is the price of the 1.37694. So between this range, price has been bouncing right from 23rd of June 2025. And taking a close look, let's view these zones right here. We can see it is obvious we have strong bearish sentiment. You can see for consecutive 4 weeks now we've been seeing candlestick repeating upper shadows on their candlestick, which is showing us prices are aggressively bearish. So it is obvious there is higher tendency for price to push all the way down to our technical support at 1.30115 next week. It is likely. Now, next week on the GU, if we are building up a bearish sentiment, there is nothing wrong about that. And then we have another minor level we can mark, which comes at the price of the 1.34348. So we can make this color to be blue line. Now we've marked our technical key level structure from the weekly chart as a swing trader. So as a day trader, you can apply this concept as well. So we move on to the day chart. On the day chart, we have our clean chart, so our levels are okay this way. Now we had a strong demand zone which comes in at this level, so we can mark this strong demand zone from the day chart, and we extend this level to the right hand side. You can see this strong demand zone, which was erected on the 2nd of December 2025 last year, was the demand which acted as support for price throughout last week. You can see right from Monday, Tuesday, and Thursday, Friday, it proved as a significant demand or support zone. So if price failed to break this level next week, it is likely price may go into a rotation upward. But if price should break this technical key level structure or the minor structure which acts at the price of the 1.31796, it is likely price may push all the way down to our technical support, which acts at the price of the 1.30115. So next week we need to pay attention to patiently wait and study what price has to do at this demand structure. So now let's move on to the 4-hour chart and study market structures switch, right? So based on the 4-hour chart, we can see the market structure is pointing all the way down. It was a massive an aggressive bearish structure. So in this type of market structure, it is easier or it is less risk when you trade in direction of the momentum. And congratulations to those who took the trade we sent in our VIP trading signals community last week. We made some buys at these zones last week, and it was a massive buy result. Let me show you how we got this trade around these zones last week. Right, let me show you on the 1-hour chart, because we detected this setup from the 1-hour chart, and this was based on structural liquidity concept. Now what we had right here is actually it is obvious. Let's go to the 15-minute chart and study what we had at this level. Let's just check it out, what we had at this level. these zones right here from the 15-minute chart. Okay, so on the 15-minute chart, we went to the 15-minute chart and then we patiently studied what price was telling us on the 15-minute chart. So on the 15-minute chart, we studied price movement, we studied the market structure, we had a break of structure to the downside, we got a lower low, and then before we got the lower low right here, we first had an internal low highs right here, and take a close view how price swept this low right here. After we swept this low right here, we went up straight and then we had a break of this low high. So right here is just like an internal market structure, and then down below right here is a sweep of liquidity. We went all the way up, you can see that. Now instantly we marked our FVGs right here. So we had our FVGs right here. Now after we marked our FVGs, we didn't just rush into the market because we had an FVG. So market rotated, and after market rotated all the way up, we had another break of structure. We broke this structure right here. Now take a close view. After we broke this internal market structure shift, price retraced all the way down. We didn't take a trade right here, so we marked this low right here as a structural liquidity. You can see that. After we mark this low of the 1.31910 as a structural liquidity, then we allowed price to give us another break of structure, which means we are now seeing technically price is technically showing us it's going up. So price went up, we exercised patience after the market crashed all the way down. Then we took out the liquidity of this structural zone right there and market tap into our FVG. After market tap into our FVG, then we went for a straight long entry. So we made our buys right here, we placed our stop loss down below, and then we rode this trade all the way up. You can see the screenshots on our social media pages how we kept on adding multiple positions. So this is how we made this trade right here, and it was a massive almost 4.5 close into 5:1 ratio setup. So this is how we got this trade on the 15-minute chart. So next week, if we can see a repetition of something of such this support right here, it's likely price may as well push back to the upside. First, we had this break right here, and we got this sweep right here. We got our sweep right here, and then this tends to be our first structural liquidity. We're expecting price to take out this level right here as a breakout structure before price retraces all the way back down. But unfortunately, we couldn't get that, so the price failed and price is pushing down. So let's see how price may still react to this low swing of the 1.31629 next week. So this is what we have on the GU. So on the GU, you need to pay attention, close attention on this currency pair. So for now, GU is on my watch list next week. Whatever I want to do, I will always let you guys know in the VIP trading signals community. So this is how your key level should look like next week. Now let's move on to the euro paired against USD. All right, here we are on the weekly chart of the euro paired against USD, and we are going to mark our key level. This is the first thing you have to do as a trader. So we look out for lows which has multiple rejections. So zooming in on this price chart here, you can see we have these zones here tend to act as a demand. Price broke this resistance break and the retest. Now we are having a retest, and at the top we have our key levels right here. You can see our price swept this high of the 1.19184. Then we move on to the day chart, and on the day chart we have some levels we can see mark out. Now let's zoom in, and we can see we had a break of this structure here. So this is still a point of, this might still be a point of interest in future. Now we have this break of this low high right here. You can see how it deceived traders. Price went crashed down. We had another structure at this level which price is still struggling to respect. Right now, these are what we have on the day chart. Now we can see the momentum is pushing all the way down, but we can see price has been going through transformation in this range band medium right from the 1st of August 2025 till present moment, and we had a sweep of liquidity that was on the 29th of January 2026. We move on to the 4-hour chart. On the 4-hour chart, we can see what price is saying. So on the 4-hour chart, we want to study the market structure right from the swings high, right the 1.20850. Price kept on giving us low high swings, and to the downside lower lows. Now let's zoom in properly. On the 4-hour chart, we have our main impulsive swing at the level of the 1.16665. You can see that. So this is still our low high swings, showing us this market is still in a downtrend. So we can tag that out as a low high swing. You can see that. Now that is our low high swing. I'm going to make this to be big a little bit so you guys can see from your end. So these are our low high swings right here, and this is the lower low carved by this low high swing. There comes the lower low. Now studying the transformation of price within this medium, you can see we got a higher low. We broke this structure, we swept this structure, price comes all the way down. Now this is not an organized price medium whereby you should be looking out for trade execution on the 4-hour chart, no. But let's check on the 1-hour chart to see what we have on the 1-hour chart. Now on the 1-hour chart, we can see we had a kind of sweep of this low. That was the last. You can see that was last month. We took out this low high swing right here to be our first internal market structure shift, and then we went all the way up and we created a structural liquidity zones right here. After that structural liquidity, then price went up and broke this structure. After we broke this structure, price came all the way down to take out this structural liquidity before we did an expansion to the upside. So that is the repetition of what we had last week. That was the same concept we used on GU last week. Now we move on to the present zones right now. Since then, price gave a pushback for the continuation of the setup, and again price swept this low, and price came all the way down to the confirmation of this sweep of structural liquidity which occurred at this medium for this bullish leg. The validation of demand was carved right here. Now studying this level right here, we didn't see any sweep of liquidity right here, just a demand pushing price all the way up. As well, this demand couldn't break this highs right here, so this still make this currency pair still difficult for us to trade. However, we need to start monitoring what price has to do at the bottom. So it's likely price may give us a kind of formations at the bottom. That is the price level of the 1.14339 all the way down to 1.13947 next week. So back to the 4-hour chart. On the 4-hour chart, what we need to do is to just patiently monitor our price goes. So you can see price is now at the middle of this upper band, low high, and technical key level support at the 1.13926. so we can't do anything right here now. So the only thing we can do now is maybe price is going to sweep these low highs to give us a swings highs liquidity, or alternatively price push all the way down to test our technical support to give us maybe support trading concept. So whatever we are going to do on the Euro USD next week, we are going to share our decision in our VIP community. Link down below in the description. Now let's move on to the next currency pair. But in summary, Euro USD is still in a downtrend, so we should still be expecting more bearish push next week on this currency pair. But however, we need to take note of the strong technical support which acts at the price of the 1.13926. The next currency pair on our watch list is the Euro paired against the Great Britain pound sterling. here comes the weekly chart. So the first thing is to mark out our key level structure before we start our analysis. We have a technical support at the price of the 0.86117, and right above we have swings highs here, and we connect it to the left hand side. So this is a technical resistance which acts at the price of the 0.88596. Last week on this currency pair was strongly bullish. You can see the last week bullish candlesticks, so we have to be very careful if we are going to trade against these bullish candlesticks which was formed last week, because I can see some traders are actually anticipating for possible sell based on this massive bearish candlestick as well. Don't forget the 3 consecutive strong bullish candlesticks, so you have to think very well if you think they can fight against this massive bearish candlestick. Now you go to the day chart. On the day chart we can mark out from internal swings. So on the day chart we have some strings we can mark out right here, but let's see the validity from this structure right here. We broke it out, we came back right here, and they are still rejecting. So we can mark this level right here, so they are still active. We mark it right here. Now you can see we are currently trading into a minor technical structure. So we zoom in a little bit and we see this massive bearish candlestick and this sweep of liquidity, or it's a graph on the day chart, but this is going to be a sweep on the 4-hour chart. Now price is approaching this technical level, and let's go to the 4-hour chart and see our structures. So on the 4-hour chart, now I know a lot of you traders already marked these zones as FVG. Okay, nothing wrong about that, but you don't have to just jump into the market because you can spot FVG and they just run without seeing strong technical reasons to take a trade, you know. Now from the bottom we have a break of this structure, and we broke this structure again. We rallied all the way up, so we are seeing a kind of a bullish setup. This bottom we got a very minor, not so deep sweep, but it's a sweep. It is obvious on the 1-hour chart rather. So if I'm going to take this as a sweep, then this is going to be my first internal market structure. Then this is going to be my structural liquidity right here, structural liquidity at the zone, and there is going to be a break of structure to the upside. So we still anticipating for price to come to pick out some unfinished business at this 0.8627. There are still some unfinished business at this yellow zone. Yeah, price needs to come back right here. Now we have some levels above. Let's check the 1-hour chart. On the 1-hour chart you can see we swept this low right here, and after we swept this low, price went up, took out these low highs. You can see the low highs, and the price push all the way up. We came down for our structural liquidity zone, and the price gave us a break of structure. So right, and based on this market structure we have on this 1-hour chart, you can see the market is bearish. So the market is bearish. You can see highs, low highs, low highs, low highs. This is the first break of this low high, and then price crash all the way down. So now some traders are looking out for sell at this zone. So using our Fibonacci from these highs all the way down, you can see we have the FVG which aligns at the 0.8, which is the 0.786. So I just did the approximation right here. You can see that. So it aligns into a FVG zone. Now that is not done. Now on the 1-hour chart, before we can take a FVG for a trade, we have to patiently study what price as for us at this medium. Right here we have to study the formations we have at this top. Can we see any reason to go short? That is what we want to find out. Now on the 1-hour chart I can't see any reason to go short. Now price is still going up. On the 4-hour chart we have no reason to go down. So now next week you have to pay attention to see what price has to do at this medium. Can we find something like of such like this? Price goes up, takes out this highs right here, and then once it takes out these highs, we come all the way down, take out this low, and come all the way right here, something like this. If you can see something like this, but this is going to be very kind of very risky, because if you are going to short right here, I advise you to still go to the lower time frame to study what price has at this zone, because there isn't any structural liquidity. Alternatively, if price can do something like this, then something like this, then that would be very strong reason to look out for a short. But price may not offer something like that, because whenever price make a push like this, now let's say for example we have a high right here and price goes into this FVG, there may be a rejection all the way down, right? And price push something like this, you may be looking out for a short. So trying to short right here, price may still sweep you up before it comes down. So this is why you have to be very, very careful. Another way around is, let's wait for price to push into this FVG, then give us a kind of a formation, something like this. No, if we can see something of such like this, then we can start distributing all the way down. So whatever I want to do here next week, I'll always share with traders in our community, right? So for now, it's getting closer to a point of interest, but we are yet to see the trigger button. So that is why I shared EURGBP, so you can have it on your watch list and patiently wait to see if price can give us information of a sell here next week. Now let's move on to the next currency pair. And before we go, if price should give us a sell right here, then next week we should expect price gravitating all the way down, because there are still some unfinished business at this level, right? Thank you. On to the next one. Next currency pair on our list is the Great Britain pound sterling paired against the Australian dollar. So let's start from the weekly chart. From the weekly chart, we can mark some technical key level zones. Right here, we have our 1.89074 as our technical support. And right above, we have a broken key level at the price of the 1.95938. Okay, we have some levels which have been taken out right here. So this level has been taken out. We can just say, okay, we mark it there. You can see how price took it out. Now let's move to the day chart. On the day chart, this is what we have on the day chart. We marked our key levels out. Now we check the day chart for any minor levels. Okay, we have a minor level here which we took out, and we have a low high we took out right here. This low high is going to be obvious on the day, on the 4-hour chart rather. So we have another low high swings here. We are here to take it out. Now we navigate to the 4-hour chart to see our market structure. So here comes our 4-hour chart. You can see how we swept these highs last week, because the market is bearish all the way down. We took out this high. We can see that bearish engulfing candlestick taking out the highs. This trade was sent in our VIP trading signals community. Yes, it was sent. Congratulations to those who shorted this trade, who sold this trade. Now this currency pairs rather. So now price is gravitating all the way down, and the 4-hour chart, we have our first internal market structure shift. You can see that. So that is what we have right here, our first internal market structure shift. And we have another structure taken out right here, which you can as well call maybe a choke, whatever you want to call it. We call it a choke. Okay, now we took out two low highs out, and we're about to take out the third one before price got a sweep. So now next week, what are we expecting on this asset? The first thing we have to understand is we took out this swings level right here. We took out right here. Now we can apply our Fibonacci from this low high swing. There are two ways to use your Fibonacci in this market. There are two ways to use your Fibonacci. You can either use it up like this and then use it to capture the 0.8, or you put it at this level of the first internal market structure shift and use it to cash the 0.6 or anything below the 0.5. That is if you are using your Fibonacci for discount and premium, right? But before then, we have some structures at the left hand side which we are yet to check out, which is the main reference in this market. We have a sweep of this low right here. We swept this low right here, so sweep of liquidity. That is our sweep of liquidity. After we swept this liquidity right here, we went all the way up and the price gravitated down to give us a low high swings, higher low swings right here. After we made these higher low swings right here, price rallied up and gave us internal market structure shift, and we have our choke right here. Now we have our sweep, we have our IMSS. No, we have after our IMSS, price push all the way down. We had a little swing up which gave us an internal break of structure, so you can tag it right there as an internal break of structure. Then price went all the way out to take out this high, so we are already seeing now a bullish market trend. Right now, what we need to do next week is to patiently wait to see how price will react at this low structure, either at the 1.89074. But let's say our Fibonacci from the trough, from the lowest point to the peak before we had a sweep, and placing it there, we can see our 1.890, that is 1.89074, is below the 50% Fibonacci level, which is okay. And as well, we have the 0.8, which is holding the strong bullish engulfing candlestick, which gave us our internal market structure shift, right? So now there's going to be higher possibility trade setup right here next week, so you have to pay attention. So whatever we plan to do next week, we are going to share with traders in our community. So this is what I'm expecting. I'm not deciding for the market, but based on what market could do, it could go down all the way down. Look out for some zones right here to do a markup, or take out these lows right here before a markup continues to the upside. But I know, and I'm seeing a bullish sentiment building up on this asset, that is on the Great Britain pound sterling pairs against the Australian dollar. So let's check out other currency pairs we have on our list before we move it on. Here comes the euro paired against the Australian dollars. So we are on the weekly chart. The first thing you know, guys, is to mark our key level. Our technical key level is the first thing. We have a key level structure at the 1.59979. We have another that is a support. We have another level at the bottom of the 1.63551. We move on to the, yes, let's just mark some levels we have right here as well. We broke some structures right there. Let's just mark it out. Okay, now we are on the day chart. On the day chart, see what we got. Nice zones. We actually swept this low and price never returned. You can see how we swept that low all the way up, so that is no point of interest for us right now. So now we move on right here, and on the day chart we can see we took out this low high to the upside, but that doesn't guarantee the buy yet. We move on to the 4-hour chart to check our market structure. Now on the 4-hour chart, wow, this market is pointing down aggressively, but seems like we have some patterns right here. So we have some patterns here which we can bring out. We mark it all the way here. Okay, now check what we have right here. You can see that we have a falling channel. We broke this falling channel, and after we broke this falling channel, you can see price kept on pushing higher lows. You can see that pushing out to the upside. Now we have some FVG breaking out of this pattern here, so unused FVG, and which aligns to our technical level. That is the level we had at the 1.63579. This was the level we constructed from the weekly chart. You can see that was the low of 17th of February 2025, which was swept this year. Now on the day chart, we swept this low, with FVG break out of a falling channel. So we are having a lot of technical factors right here. So now next week we are expecting price to push down, but take note, because we can see a FVG doesn't mean we have to rush in without taking a critical view of the market. So we have another structures we broke out right here. We broke out a low high swings here, another low high swings right here. Now we are seeing a possible bullish market structure. So now let's apply our Fibonacci to look out for discount zone from the lowest low to the peak right here. We fire our Fibonacci. Now you can see our FVG is underneath our 50% Fibo level, so which is okay right here. Alternatively, price can still push to the 0.8. So next week it is likely we may see a push up if price bounces all the way down. And when price bounces right there, we also need to study internal market structures, such on the 5-minute or the 15-minute chart, before we look out for a bullish sentiment right there. And your stop loss should be low. So if you're not a swing trader, this trade is not for you. Here comes Euro paired against the Switzerland. We are on the weekly chart. So before we move on to the day chart, the 4-hour chart, let's quickly mark out our key level structure, which is the first thing we have to do when analyzing the market. This is our support taken out, and let's find out the momentum in this market. Here comes the momentum. You can see a bearish market swing. You can see we make this to be bold. All right, you can see the market is pointing all the way down. All right, now we are pushing gradually into this falling trend line. We got a gap down around this zone. So let's mark out this gap FVG. There's a gap FVG right here. So price tested this last week, right? There's a gap FVG here. Now, if you don't know what gap FVG is all about, well, it's another form of FVG whereby it doesn't occur with the body of the candlestick. Instead, a space, right? Now you can see that price already pushed into the FVG. Let's make this trend line to show on the lower time frame, so we can implement that with our analysis as well. So on the day chart, you can see now price pushed into that level last week, and also with a key level structure, FVG, gap zone, trend line, no downtrend. We have a lot of technical factors right there supporting bearish push to the downside. But that doesn't mean we have to jump in. We don't have to jump in. Let's move to a 4-hour chart and study market structure push to this zone. Now on the 4-hour chart, we have some push all the way up, and we can study the momentum from this higher low all the way down. And we ride it. You can see market is still pushing all the way. Based on the 4-hour chart, the 4-hour chart is a correctional move because the weekly chart is going bearish, so we should be looking out for a way to go bearish with the weekly chart. However, the 4-hour chart is showing us bullish, so it's an internal structure which is a correctional move, so don't be deceived by that. Now, what are we expecting next week? What I'm expecting next week right now is I want to see our price will carefully move all the way up, bounces all the way up, create some kind of inner liquidity, and then price rises all the way, and then we push all the way down. So if we can see something of this pattern right here, we may look out for push. So if price can give us a structural liquidity, or price give us a kind of pattern whereby we have a massive sweep of this trend line or trend line liquidity, whereby we sweep this trend line. After we sweep this trend line, we come bounces all the way, break out, or we come right here, we push right here. It's going to be very risky, but we have to be very careful. But if you can see a structural liquidity, that would be very nice. So in summary, I can spot out potential setup on Euro switch, but it's yet to be confirmed. So we will have to pay attention next week. So this is what we have on the Euro paired against the Switzerland. Now let's move on to the next one. Next is Australian dollar paired against the Switzerland. We are on the weekly charts. First thing, mark our key level structure out. Right here is our key level. You can see how we broke this support structure the way to the downside. We retested. A retest doesn't mean we have to start looking out for a sell. It means you have to pay attention. Price is our point of interest. So have you seen validation entry. That is what we need to find out. And on the weekly chart, we can see we have a rising trend. You can see how the price kept on going all the way up. So it's normal for us to rise up to test this level. We got a bearish pin bar, so we have to start paying attention. On the day chart, this is what we have on the day chart. We can extend this a little bit down. Okay, now on the let's move our trend this way. Okay, good. Now this is what we have on the day chart. On the day chart, price is rising up. We are yet to see reason to sell. Now on the 4-hour chart, let's study market structure. On the 4-hour chart, we got a sweep. I remember we shorted this currency pair. We sold this currency pair. Yes, we made a significant amount of money. Now we have a break right there, first internal market structure shift. After that, and we have a break of this level as well. And the FVG traders, we have a strong bearish Marubozu candlestick right here. You can see that. So this is what we had. So next week, let's see how price will react. And if we push to this level, let's go to the 1-hour chart and see if we have any other patterns on the 1-hour chart. Okay, good. So on the 4-hour chart, we are going to patiently wait next week for price to push all the way, if price can push. But before price can push to this level right here, some people must be willing to push from this bottom. So let's see how we can capitalize on this bottom to push it up before it comes down. So let's study what price is telling us at this bottom right here. Maybe we can see opportunity to capitalize for a buy before we look out for sell here. Okay, but I'm not saying you have to jump in for sell here. There are still some patterns we have to see right there, because this is an everyday doesn't mean we have to just short blindly. But this is our sweep. After our sweep, we took out this structure, which is our first internal market structure shift. Then we took out this low right here, but market is still bullish. So now after we took out this structure here, and then this structure right here, it was a slight breach. Now take note of the pushback here. Take note of this upper shadow candlestick, which we can use as our structural liquidity. So we can use this right one as our structural liquidity right here. You can see that. So now price can utilize this level as a liquidity zone, whereby price just pushes all the way down, all the way up rather, take out this level, push more deeper into this level, and the price could do something like this. I'm not predicting the market. I'm just showing what is likely, or based on what is happening right here. So we can see something like that, right? So this is what we have on the AUD switch. Now let's see what we have at the bottom on the 1-hour chart. On the 1-hour chart, we want to read internal market structure shift. So we have our first shift right here. This sweep doesn't give us a sweep of liquidity, so it's not a strong move. We broke it, we came all the way down here. Now this our structural liquidity zone. So we need to break this level before we can say, okay, we want to anticipate. If we break this level all the way up, and then price does something like this, move up, then come back to test this within this, maybe use trendline liquidity, whatever, before it's expand to this level, then look out for something of such before we mark down. So this is what I am seeing on the AUD pair against the Switzerland. So next week, let's see how far price can go. Now let's wrap up our analysis with the king. We have two kings. We have the gold, we have the BTC. So now let's check gold. Congratulations to those who are still holding gold trade in the VIP community. You should have trailed your profit by now. If you already know what you are doing, you should have trailed your profit. Yes. Now check what we have on gold. Let's wipe out everything here to make the chart to be clean once again. You can see this ice. We broke it out, we rejected. Now I can see the strong pin bar. It's the doji. It's a strong doji. We are on the day chart. On the day chart, we broke some levels right here all the way down. And on the 4-hour chart, the market structure, we have the break of this level, and we have another break and the retest last week. One of the reasons we took out a long right here. And on the 1-hour chart, you can see our price first got rejection, a pushback and a rejection, so we went long for swing trading concept. So our stop was down below. So it's a swing trading concept, so we are seeing profits. You should have traded your profits, some profit. So next week there is a higher tendency for price to move to the structure of the IFVG. So 15-minute chart, you can see that on the 15-minute chart we got a sweep of this level. Wasn't a strong sweep though, and we got a break of this structure all the way down, and we broke series of structures all the way down. You can see that. So you can see internal market structure shift, change of character, push to the downside, and now we got another low high swings right here. So for price to push into this medium, there must be a force pushing it upward. Before price can move right here, there should be a force. Now let's try to study the forces that can be right here. So at the bottom here, we have our internal break structure right here. We went all the way up. Now let's wait to see if market can give us something like a market push down. Of course, this is our first higher low after this push up. So we have it right there. So next week, let's see our price. But we still need price to go all the way up. If you can push something up like this, if it crashes to this level right there, then we can anticipate possible push to these zones right here. So this is what we have on the gold. So let's see how far that can go on gold next week. So let's check the BTC. BTC, I shorted some weeks ago. It was massive trade. So for those who are still watching, we have some technical levels we can mark out. So we have a level right here. You can see that level, and we have another levels right here. You can mark this level as treat this as a sweep of liquidity. And on the day chart, we have our lowest low here, and we have some strong FVGs here on the day chart. We monitor that. This was where I traded BTC. I traded it right here from the sweep of this high. That was like maybe 2-3 weeks ago. All right, now let's study the day chart. On the day chart, you can see we have some minor structures lying right here. You can see whenever price gets in this structure, we always have a demand to the upside. Now on the 4-hour chart, you can see what we have on the 4-hour chart. So we have some demands right here. Now a setup was being originated at these zones right here. So I saw it was a kind of very small pattern for scalpers. So let's quickly check this out before we check out the pattern at this level. Now let's mark this level. Let's examine these levels right here. Okay. Now on the 1-hour chart, if you check this 1-hour chart properly, you're going to see we have some sweeps right here. After we swept this level right here, we took out this high internal market structure shift. After we took it out, price went all the way up, and price created what? A structural liquidity right here. After the structural liquidity, price went up again to test this high, but it wasn't a break of structure, but was a sweep. Before price came down, price used the structural liquidity zones to give us a mark up. You can see that. So price has done that, right? So that is what we had on the 4-hour, the 1-hour chart. So that was a trade, ending of last month. So now that is gone. On the 4-hour chart, let's study what we had right here. On the 4-hour chart, you can see how we swept this low. We went up, we broke out this low highs, and then we continue to break out this low high. We went all the way up, price make pushback. We used it for a long entry. We traded this in our community. I remember that. Now after that, price went up and gave another break of structure. After the break of structure, price went all the way down, and price continued another break. It wasn't a nice break. I shorted this, price comes all the way down, push all the way up, coming down. So now we have some structures here, our protected low. So next week, let's see how price is going to have, because studying this market structure right here, you can see we went all the way higher low, now price is coming down. So it's likely there will be a reactions at those zones next week when price get to this 63,000 or 62,500 zone. So next week, pay attention to this level. So this is what I have, and as well the lower low are the 59,860. So in summary, what I'm seeing on the BTC is still poisoned. It's still poisoned to come to the downside. So this is my summary on BTC. BTC is poisoned to still come to the downside. All right. So guys, this is what I have for you in this weekly market analysis. It's no more only Forex weekly Forex forecast, because we discussed gold and BTC. So let's just say general market analysis in the Forex, crypto, and the commodity market. So if you'd like to become a member of our Trading Signals community, check the links I left in the description of this video. Subscribe, like, and as well, guys, I want you to share this live stream. Share this market analysis. Yes, share this Forex forecast market analysis. And most important, please comment below which other market you want us to analyze during our trading days next week, or do you have any suggestion, any topics you want us to come up on this channel, or do you have any topics you are struggling with, or any other thing you want us to discuss, or any other content, anything you want me to create a content or a video or a tutorial guide on, just let me know in the comment section. I read the comments and I respond to your comments. Right? So manage your trade safely, don't risk more than the amount you cannot afford to lose. Right? I advise as a beginner, don't go more than 1-2% of your capital, because you are still coming up. Right? So the more you trade, the more experience you gain, then you can decide your risk tolerance, or maybe you want to increase it then. Right? But for now, keep it low. 0.5% is okay. Just have to push gradually. Right? So I'll see you in the next one. Don't forget, the comment box is all yours. Comment down anything you want, any topic, any tutorial guide, and I'll see you in the next one. The Trading Signals link is down below. Check it out now. Mentorship program as well, link is down below. Check it out. I'll see you in the next one. Peace.